14 June 2023, Wednesday, MAO with Kel once again, and so many crazy divergences now across the market. And Goldman Sachs just raised S&P target to 4,500 for 2023, and some even is calling for 5,000. This is getting crazy. So subscribe, like, and comment, and let me know your view for today. This is a must-watch video. Let's go. All right, disclaimer apply as usual, and thank you, Ames, for the kind sponsorship. Now, first of all, are you attending this Saturday session? Now, this Saturday on the 17th of June, I am going to share with you my view on the gold market, all right? I'm actually leveraging on what Larry Williams is saying about the gold market and with my own indicator, and I think that you should really attend. And of course, very important thing is that you may stand a chance to win $50 as confirmed, but we're trying to up the carrot to $100. So how to do that, right? Very simple. Just basically find this particular article on my Trade with the Boys Facebook page, and then leave a comment like this, like what everybody has done. You see that so many people have going to attend this coming Saturday session. You should attend, you must attend. I can guarantee you this, you will be very stunned with what we'll be sharing. Not only market news, I got a gossip right for you. All right, so attend, do quickly now, put that I am attending into the comment box. Okay. All right, let's discuss what happened last night. Oh, wow, the Dow Jones up by 145 points, firmly staying above 34,000. Well, interesting. NASDAQ continued to rally up 116 points to 14,900. We're 100 points away shy from the 15,000. As a matter of fact, the NASDAQ actually went up to near to that level. Now, S&P continued to ride up to 43.69 on closing. Okay, now the thing is this. Tesla is amazing. $258 US. Now that easily put Elon Musk way in the #1 list for the richest man on earth. All right, so I'll come to that later. But important thing is now the S&P has went up, and of course it's a 13-month high. Now the market is focusing a lot on the 13-month high, 10 months high thingy, because they really want to push the market up. So what we have is incredible. We have the new inflation data coming in that the price pressure has slowed down. Now I already tell you guys the data will go down. Like it or not itself, right? If they don't have the data going down, seriously, that means the Federal Reserve, what I've been doing is really out. And of course, based on the Fed probability numbers of the people looking at a rate pause this round, I think the news has came out. They have probably calculated that the CPI data will be lower. So that's the reason why the Wall Street geniuses, they buy into the expectation that today there will be a rate pause. I'll come to this also later on. But the main thing is right now, the May Consumer Price Index has only went up by 4% year on year, marking the slowest annual growth since March 2021. Now, this is amazing. And of course, that basically gave the probability to about 91% chance that the Federal Reserve will pause interest rate tonight. All right, so with that actually happening, so with that means that the stock market go higher? Well, it is possible, and that's the reason why you can see Tesla going all the way up. So now I'll bring you to 3 points I want you to take note here. Now, first of all, Tesla, when it broke below the 200-day moving average, that was a very key point, and that was roughly between 300 to 280 level. All right, so that was what happened back in September 2022 area. Okay. Then after that, the price went down. We know that, yeah? Okay. Now at this junction here itself, right, not only Elon Musk lost his position as the poll leader of the richest man on earth, also at the same time, there were a lot of people expecting Tesla to go down to $70 and lower. Now, I was actually one of them. But when I saw the volume picking up result, I got very uncomfortable. In fact, I tell my students this, I look, if you don't mind taking the risk to buy some Tesla now, you can try. All right, I am looking at 77, but of course at $91, I believe that you can try to buy some Tesla. And of course, Tesla really recovered all the way to about 210. Now that was where there was a heavy resistance at 210. And that was also where I was telling people that, look, you want to short Tesla, 210 is a good number. And of course, Tesla did came back down to about 153 back then. Okay, so at that junction, right, I was expecting Tesla to go back to 120. But then when I saw Elon Musk coming in, and going to China, talking about China, and when it broke above the 200-day moving average, I know that that's it. This is going to go up. And truth be told, now it's going all the way up, breaking all my resistance. Now there's a big gap over here, and I think that the market is going to cover that. So about 265 would be a very valid price to take some profit. Now the thing is this, of course, Is it because the Chinese funds are helping Tesla now? Is it because of a lot of short sellers shorting the market? Well, it's all possible as long as there's money to be made, right? The market really don't care. All right. Now let's look at the CPI data. Now this is the lowest in 2 years. Wow, CPI data. The last time is 4.9%, and this time around it marked down all the way to 4%. This is incredible. Now, as much as the interest rate have been going up, it's like a blueprint whereby if the interest rate is going up, the CPI data has to come down. And look at it, it's really coming down in an incredible pace. 4.9 to 4%. This is incredible. So is it the time to tell you that time to buy more stocks? Well, let's put it this way. The Federal Reserve won it at 2%. Well, the announcement at 4%. So that means that very good chance that they can pause interest rate. All right. But on the flip side, if they really want to go for it and really bring it up 2%, they will not pause it. As a matter of fact, likely they will do a 0.25 today. And then after that, we look at another 0.25. And that will really bring the inflation down to 2% as fast as possible without breaking the market. But of course, on the flip side, if they increase interest rate, the bank will get hit, the more money will go into the money market, and that will create a new bubble altogether. So what is your view? Let me know in the comment box yourself. All right, to me, it's very simple. We just need to understand this. Inflation is still high, and I don't think that it's 4%. Come on, guys. We all know that the fact of the matter is more than 4%. Let's bring in Santoli in to see what he has to share with all of us. Yep, let's go.
Is standing by at the CME in Chicago. Rick, we've got about 1 minute before we get these numbers, but obviously this is really important with the Fed meeting today. First day of a 2-day meeting.
Yes, it's not only important for all the obvious reasons, but as we look around the U.S., it's important for some of the outside reasons, like the UK, what's going on with regard to their earnings, their inflation scenario, their interest rates have moved higher. They're going to pay attention to. In June of last year, 9.1%. It's come down every month.
I'm going to jump to where the data come out, right? Let's enjoy this session. Yeah.
The 11th. No other sector in the CPI series can say that since its high watermark, and we're only a couple seconds away. We're going into this with a 368 yield on 10s, and the data starting to hit the wire. Rates are moving up already, so somebody seems to have this number before I'm seeing it on the wire services. We're now up to 372, 373, up 1/10 of 1% on CPI headline, exactly as expected, up 4/10. If you look at core, stripping out.
All right, so you can see that, right? I mean, the numbers haven't hit the wire yet, and the market already moved. Come on, man, this is ridiculous. This is why I say, guys, this is Wall Street, okay? Look at the initial dip first, all right? And after, boom, the price went up. Oh, right. So came out at 4%, better than expected. This is what is happening right now. But is it time to buy the market? Well, that's the reason why Goldman Sachs now has lifted the S&P 500 price target to 4,500. Now, where we are now, about 4,400 area. So Goldman Sachs is expecting a higher S&P. So let's see what Goldman Sachs has to say, or actually one of the analysts, right? Let's go.
20% off its October low. Tech giants have been leading the rally over the last several months since the start of the year, but can it last? We want to bring in Ryan Detrick, the Carson Group's chief market strategist. Ryan, it's good to see you. Lots of investors out there wondering whether or not this momentum to the upside, if this rally has enough legs to continue. What do you think?
Yeah, thanks for having me, and TGIF, everybody. We think it does, right? I've been coming on for a while saying we think this is a new bull market. I know now up 20, everyone's saying it's a new bull market. We were overweight stocks in late December on the Carson Investor Research team laying out some of these things. I'll just start with this. I love this little factoid. Today's a Friday, right? This is one of the strongest years ever for stocks on a Friday. Think about the last couple of Fridays. We've got buyers. I know we'll see where we close here, but look like another up Friday. Keep this simple. This would be the best year ever for stocks on a.
All right, so this is not actually based on Goldman Sachs, but it was Carson Group trying to tell you that why are they so bullish too. But let me show the article. So Goldman Sachs is joining the list of market strategists looking at S&P to go up much higher. David Costin and his equity team is looking at 4,500. They were looking at 4,000 earlier of the year, and now looking at 4,500. So Goldman Sachs, one of the leading investment banks, are looking at a higher number right now. But the thing is this, what's the main reason? Well, the main reason is because the bets are almost dead. Okay. All right. So take a look now. The net short position S&P 500 E-mini futures had dropped from a record high. So it was here at the start of the bear market, and then boom, wow, look at it. They totally have exited from the short side itself. So this again is a very good telltale sign that the market could be going higher. But of course, we also know that, right, it also happened just before the market crash back in 08, 09. So the thing is this right now, if you look in the history, whenever this type of pattern happened, we all know that the market is near a turning point. Remember, in 2011, that was where the market turns down. It was the same thing that's happening right now. So what do you think, guys? All right. So this is something that when bears are out of the market, probably it's time for bulls to get out too. All right, so the thing is right now, the big money market managers are all slashing away their bearish wages, and they're looking at the market to go higher. Now, basically, from the Commodity Futures Trading Commission, the reduction of almost 90,000 contracts over the week through Tuesday ranks of the 5 biggest episode of short covering since 2018. All right, this is actually tracked by JP Morgan Chase, and they were also the bull side itself in a way. So Morgan Stanley was bearish, but JP Morgan were bullish. All right. So with all this thing happening right now, majority of the funds are all crowding at the long big techs, but interestingly shorting the Chinese equity. Now, at the same time, they do long the Japanese equity. So there is a bit of changes. I mean, divergence among here itself, but probably everyone is on the same place right now. And that's when the right NASDAQ is at 14,900. So the 5 largest stock that is leading the market is obvious, it's really clear. We have is Amazon, Apple, Microsoft, Google, NVIDIA. Now, this is crazy because look at it. The index movement itself is really because of discounters. That's the reason why the S&P is moving in such a level. But think about this right now. The remaining 495 companies, they are up only 5%, while the S&P up by 13%, joisted up because of this 47% by these 5 counters. So if you look at it, if the 5 counters do pull back at the same time, which is a very important catalyst, that will smash down the S&P 500. So, but again, as Goldman Sachs has said, they cut the likelihood of a 2023 recession. So while these guys are calling for a lesser chance of recession, there are more people are looking at recession like Wells Fargo 2024. Oh gosh, okay. So thing is this Goldman Sachs looking now for the S&P earnings per share to be 224 above the 206. But again, for Morgan Stanley, they're looking at 180 plus. So again, different camps, even though they go for the same, they came from the same technical school, right? Okay, so I'm gonna leave it there for you to tell me. But the thing is this, there's some analysts telling you now that it's a new thing to watch out for. A 13-month high, and it's flashing a rare signal. Now, what is this all about? Apparently, okay, based on a technical strategy, Stefan, he believed that, right, this is the 25th time the broader index notches a 52 weeks high after a long pause of 300 or more calendar days between the 52 weeks. So basically, this is a rare signal, and usually that means the market will trade higher. As a matter of fact, he's looking at 4,900 to 5,000 by next summer. Wow, this is really crazy stuff. So I can only tell you this. I still also believe that we'll see 4,900, but my view is next year. In fact, itself, any chance the market can come down to a lower price from now till September, this will be the best time to buy because I am very bullish towards this last part of the year. But for the third quarter, I believe there's some selling. But of course, again, people are not calling for that. In fact, there are more people calling for buy, and they're looking at 4,006 and even higher numbers. So all I can say is this, most people now are turning bullish, but of course, PDIG, they are saying that, no, this is a bit too high right now. They believe the S&P can trade lower, so you can both sides of the camp on the same article. So you have to make your choice, yeah? But the thing is this, using Game of Trades. Now, these guys are pretty good with technical. I like them, so I'm going to share with you. You can actually join their YouTube. Now, the thing is this is the put-call ratio at the moment right now, and we are definitely at the low end. And very interesting, guys. This is something interesting. You can see right here, there were 2 views, 2 points here similarly, and that was where the market turns. So undeniable, we do expect some selling in the near term. And of course, this actually happened back again in 2020, but the market went up before coming down slightly and then enter a stronger bull. So this put-call ratio is good, but it's not 100%, right? It's vice versa. Same thing for the bullish reading of the AAII. We can see that, right, whenever people are so bullish in the market, all right, there will be some profit taking soon. So what do you think, guys? Maybe these are all the signals for us to take note, and probably you need to just go slow with the market. Now, tonight, FOMC meeting, we all know that in just 13 hours time, we're going to see the Federal Reserve going to announce. Now, of course, most people are expecting this to happen. Now, let's take a look right now. So the thing is this, for tonight meeting, they are expecting the numbers to show. Okay, hold on, let me scroll down the button. Okay, they're expecting the rate to pause. Okay, the current rate now is 5 to 5.25, and 96.5% of people are expecting that this will be pause. Okay, only 3.5% of people are expecting a rate hike, including myself. But the thing is this incredible. Let's take a look. Incredible for the 26th of July next month. Well, the number is quite interesting. As a matter of fact, for next month, there's a 59.5% of people expecting there'll be a rate hike. Now, this is meaning that the market is really buying that there will be a pump up in the CPI data. Or is it because they know that the CPI data is being pushed down on purpose for the pause to let the market goes up? Well, it's all possible, but my view is this: regardless itself, right, there will be a rate hike either today or next month. But my bet is nonetheless itself, right, with all these numbers right now and everybody's so bullish, I think you need to be very, very careful, because undeniable now, the scary part is the fear and greed index now is at 80. Oh gosh. Now, do note, guys, I've been doing this for quite a while, and I'm telling you this: when you hit 80 and above, you just have to get out. You don't need to stay there too long. And look at the moving average itself versus the 125 moving average. We are really very far away. And the thing is this: right now we are at 4. Sorry, give me a moment. Let me exactly this for you guys. Okay, not so easy. Okay, now it's 43.69, and a 2125 moving average is 4051. So it means that, right, we are 300 points off from the average. Now 300 points multiplied by 8. That's how I calculate my own numbers. The Dow can pull back 2,400 points from today onwards. All right, today is the 14th of June. It is very possible. With the bullishness now so incredible, why not? Now take a look at this one. This is where the divergence have to kick in. All the divergence I've been saying earlier. Now this is the bond ETF, and this is the Dow Jones, right? So what we can see very clearly that usually they move in tandem, right? Meaning if the bond price coming down, the Dow Jones come off, the bond price goes up. You know, this is what happened, right? The bond price and the yield, they go opposite direction. But now the thing is this: the bond prices are not following through, and yet the Dow is rising. Now there is a strong divergence between them. And if we look at this point right now, the Dow is reading at 34,200. Okay, but the excuse me, the bond market now is trading about 101.35, which you look at all across it, that'll be 31,600. So remember, just now I just told you, right? Based on that itself, we are actually pretty far away by at least 2,400 points. So if you look at it in terms of mathematics, 34,200, if you minus off what I just said, 2,400 points, what do we get there? We get about 31,000 plus. And that's the reason why I say that we could see 31,800 in the near term. So again, will this actually happen? Well, this is really back to the market to decide, but I strongly believe that you just have to be very careful, because things can go really bad. And of course, you may get the shock of your life. All right. So this is something that you need to take note of that. Let me clear my screen and let's continue. And from there itself, right, you can see right now, the yield itself is now trading at 5.2 for 3 months, but yet itself the 10 years at 3.81. So the divergence is still continuing. But the thing is this: the market doesn't need to bother about this anymore, because they don't care about this. But you know that the short term, it might be good, but the longer term, things can get very bad. And this is something that I want to tell you guys. This is the 100% signal since 2000 and now, and you really must understand this. Okay, so what we have on the screen right now, the one in orange is the S&P 500. Now the one in black, that is the initial claims. Now the thing is this: look at it now. Whenever the initial claims is at about the bottom out, right, you can see the stock market is at a higher level. And once it bottom and start to go up, that's when the initial claims have to go up, right? That is where you can see that the S&P start to fall. All right, this is where the S&P starts to fall. Okay, so the same thing again, when the thing itself, when the numbers are moving up, the initial claims, that is where you have the sideways movement, and then after that, the S&P start to fall. So the thing is this: it happened again, same thing, but that was pandemic, so maybe that was different. But now, guys, we can see very clear the initial claims are moving up. and yet the S&P is moving up. Now, this doesn't make sense at all. This is actually very strong divergence. So once this market is over, which is that tonight FOMC is over, I cannot believe that, right? The market will really start to sell and focus on the next rate hike and of course, and other stuff. So which means that, right, if this number continue to go higher, this could actually start the ball selling. All right, the ball will start to sell, and let's see whether we can see this happening. All right, now take a look at this VIX. Now VIX, as I mentioned to you, this is something to take note of on VIX. Right, you can take a look. Let me change my color for a while. Okay, let's go. Okay, for the VIX, you can see right now it has came down quite a fair bit. All right, the last time we see this was back all the way to 2021, and the VIX back then itself was around the same area between 16 to 14, and that was where the Dow Jones was trading at about 36,000 area. Yeah, then that was where the market came down quite frenetically, down to 34,200. So which means that it was down by 1,800 points. And back then, if you look at it, it was also escalating every single day as if that it is supposed to go higher. And then after that, we have to be a doji movement and the selling come the next few days. So I strongly believe that there will be a similar pattern coming up, and traders, you need to really be careful. Now, I already said back in my MAO, I said that between 13 to the 15th of June, okay, that is where the market will likely U-turn. All right, U-turn. Yeah, this is what I wrote there the last few MAO. So guys, this is my view here. Between 13 to 15 of June, the market will U-turn. All right, so take note of that. This is likely going to happen, and today is only 14th of June. And of course, the thing is this, let's do like crude oil prices. Now, crude oil price, basically everyone says that, you know, as long as you're the producer, you can make the price. But you can see that, right? We all know that the Saudi Arabian Energy Minister Prince Abdulaziz bin Salman, has been warning short sellers not to bet against OPEC Plus. And of course, it worked on the 23rd of May, and the market actually rebounded. Okay, that was cool, right? But the thing is this, recently, he came out again and won again, but the market did not react. In fact, the market came back down so strongly. So who has the power to do this? It must be the Wall Street guys or someone in the government, the White House, telling the Wall Street guys, go, I don't care, bring the market down, bring inflation down. This is very important because the CPI data shows that it's energy prices that came off that leads the CPI data are coming off, right? But food prices continue to rise, and although shelter and this transportation came down a little bit, but that doesn't warrant a near to 1% drop. So it's very clear that it's the energy market that is actually showing or reflecting the CPI data. But the thing is, how long can they do this? Because I believe that the Saudi is getting pissed off. And of course, we can see, I've been telling you guys this, the Dow Jones and the crude oil price, they move in tandem, right? You can see here, whenever the crude oil price goes down, the Dow Jones fall. Whenever the thing do the other way around, you can see the market is moving up, right? So the thing is this, now we can see the Dow Jones moving up, but yet the crude oil price is coming off. So this speaks for itself, guys. This is something that we don't see in the market. And if that's going to happen, there will be it's a divergence right now. The market may pull back. And if the market pull back itself, right, you can see across it, it also come back to my 32,800 to 32,600 view. So what do you think? I think that this is going to happen. A divergence in the market is just a matter of time, right? Let's see whether I will be right. So with that itself, let's wrap it up. This is the S&P with technical analysis, and it's very clear that we are at an overbought situation now. We are at 73 level, and the last few times we see something like this, the market actually became toppish, right? So this is all the level here. I'm going to show to you all the level here. And we think that you just need to be very careful because the market may be signaling a pullback in the near term. All right. So traders, be careful. The technical shows that this is A, this is the B, this is our C, and this is our D. So this D zone itself likely is going to see a pullback, and of course S&P will pull back. The first target will be 41.97, and any lower result could be a dive all the way down to 38.12. But again, remember, I'm not calling for sell immediately, but just prepare, be careful, because everything shows a sell is just around the corner. All right, this is Cal signing off. Have a great day. See you then. Bye-bye.